Hello there. All right, so welcome to chapter 5. Now, backtesting, forward testing, and getting funded. So, I want to say congratulations to you because for you to have gotten to this, hopefully you've gone through each of the chapters and you've done all the things you're supposed to do, the practicals, you've tested, you've actually checked out all the models, you've done all the assignments where you submitted your own version, of the models, depending on the pairs you've looked at, and you've done all of those things, you've done the homework, and now you're here in chapter 5. I want to say well done and congratulations to you. Now, backtesting and forward testing. What is backtesting? What is forward testing? Backtesting is simply a system where you get to test if the models or if the strategy you have in the market is actually working. So you simply just pick a pair and you just go back in time and say, okay, I'm just going to do this for the last 1 week to see if I'm going to see this model again and again and again in the market. Okay, that is simply backtesting. Forward testing is you trading a live market or trading a demo account, a live account, not necessarily your money demo account, no, your money live account, your money, but doing it in real time, okay, and seeing if you can actually support those models when the market is playing out in real time. Okay, that's essentially what forward testing is. So we're going to look at those, and then just to find some of the models. So I would also want you to do this also as an assignment. Just take maybe 1 month or maybe just 1 week. Just 1 week. Let's stick with 1 week. Take one pair, 1 week, and back test it and look for all the models, every possible model you can see. So whether it's the SIP model A, SIP B, SIP C, SIP D, whatever model you can see, just make sure you take track of that. And we're going to do that right now. We're going to pick EU and we're going to look at and see if we're going to get all the models that we need to get for the last 1 week. And then we're just to show you how to back test essentially. Okay, nothing really complex there. All right, so without further ado, let's look at that. So let's look at EU. So I'm just gonna go here. I'm gonna click on EU. Yeah, and with that, we're gonna take this to 1 week, like 1 week ago. So let's do that. 1 week ago. So what we're gonna do is we're just gonna hide all of this. Just a sec. Oh no, I think I need to go too far back there. Let's see. Can hide to this level. Okay, wait. Let's do this. I think. Okay. All right. So let's hide that. Okay, cool. So that is gone. So let's do this for the last 1 week. So we're gonna take the replay button here. I'm gonna take this to Sunday. All right. So now this is where we're at. Okay. So back testing, like I said, is simply just going back in time and then testing a strategy. So you back test. So you go back in time and then you test the strategy to see if it works. Now, here you can see when the market opened last on this particular Sunday, it opened with a gap. So we're just gonna mark that. Okay, so we know we have a gap there. Now, what is by the time? So let's see, just move my cursor. You can see where my crosshair is. That's about Monday, 15 a.m. 12:15 a.m. So let's just move this and see what we get. Okay, so this is 1:30. Price is doing its thing. Of course, we're not trading during this time market open Asia session. Most likely wait for London session and let's see what we get. Okay, so this is 6:45. So 6:45 at this time, we definitely are on the chart, or I am on the chart, West African time at this time. So we can just draw this, or we can even use a lower. We can draw that, but we can also use this one here and draw that. So you can have that. So with this now, we know that first off, we know that this gap has to be filled. Okay, but also what we also know is that now with this taking out, this candle taking out this high, that essentially has created for us an inducement here, right? So that's an inducement here. So we can choose to look at this as this being the low the price may have to return to before pushing to the upside. So just to be on the safe side, I'm going to put this like this, my entry here, put my stop loss below this area here, the entire area. And then since I know this is a gap, so I can just target, something higher, or 1 to 3 if you want to stick to 1 to 3, or 1 to 5, or even 1 to more. So let's just put something around 1 to 8 here. Okay, so let's see now. Price may return all the way here, or price may just move along. So we know that we can always take 1 to 3, anything below 1 to 3, of course we're not trading, but 1 to 3 is a good number. So let's just make this 5. So let's put this here. So cool. So with this now we can just see, okay, we got an entry. Perfect. Okay, price is out. That's what we get. Okay, price is still dancing. Okay, eventually we're out of the trenches. So we can see here that this high and taken out by this candle right there. Let's just remove that. So basically we're out of the trenches there. So you can see that. Now a few things also to note here. You can see that this structure here, price came, swept the low. So essentially creating for us what we call a sweep zone, right? So we can look at that way and then draw that entire candle out as a sweep zone. And then we can also try to see if we can get an additional entry. Okay, if the market is to create an inducement structure. Now we need an inducement structure. So clearly we don't have that in place yet. So let's see. Okay, so we have that, but price is left without really returning to give us an entry. So that's the first one, for Monday. So next, we're going to look for opportunities going into Tuesday. So let's take this to 7 a.m. Oh, by the way, before I continue, what we're doing here is we're looking for the models, right? So what model was this first trade here that played out? So let's take this out since that did not play out. So what model was that? Let me see if you get it. Okay, well, for this one, this is simply just model B, because here we do not have a sweep of liquidity. We just had an inducement created, price came, swept the inducement, and then pushed out. So that's simply just, model B. Okay, now you can also argue, of course, that we didn't really have, the first structure here that created for us that first V, before we got the second one. And that's a very justifiable argument. But sometimes, depending on how the market is structured, you may not necessarily get that. This trade typically for us will be based on the fact that we know that this gap has to be filled. So the market has to reverse. And it's based on that, we just looked for the inducement and we entered the reversal. Okay, so that is that. Now let's get this to Tuesday. So this is Tuesday, 6:45. Okay, so Tuesday 6:45. Let's see what we have here. So this high has been taken out, essentially creating for us an inducement here. Right? So this essentially creating for us an inducement. So we also do have this here. So look at this. Okay, so that now creates for us this demand zone. That means this is where if price returns, taps into this, then we expect price to push out. So this could be our entry here, stop loss below this area, our target, the previous high, of course, right? So we can say what's our target? 1 to 3. So let's see if we can get that 1 to 3. Yep, around here. Okay, so let's see if we get an entry at all, if price gives us something. Okay. Okay, price is left without really giving us anything. So price did not come to our entry. But what model is this? Let me see if you get it. Model B, right? Break of structure, another break of structure, inducement price comes, fail to clear that inducement to give us an entry, but that is simply a typical model B. All right, so that not play out. So let's see what we get in London session. So New York session rather. So New York session price has gone out, and this is how you continue to backtest. To see if a model works in the market. Okay, and gather your own data. So with this, Tuesday is done. No trade for Tuesday. So let's take this to Wednesday. Okay, ooh, that's too much. Calm down. All right, so here we go. So now we have just that, continuation really. Price is just pushing higher and higher and higher. So here, there's no obvious structure below this area for us to, have our demands on. So we just wait for more and see what price prints out. Okay, so let's see what we have here. So you can see price is essentially just pushing to the upside. Now the question, a lot of people will ask, okay, you have all of this break of structure here, you have another one here, you have another one here. So which one, should we respect, or should price respect? Okay, and that's going to be a very valid question. All right, now for me, I'm going to say, okay, this is the last break of structure. So this could be here, an inducement. All right. So that could be an inducement ahead of this. Okay, this area here. Okay, so what do? You can say, okay, now based on that, we can put our stop loss below this area and our target 1 to 3. Now, you also need to bear in mind that while this may work out, there's also, you have to put this in confluence with the higher time frame. So is the higher time frame bullish, or is the higher time frame bearish? If the high time frame is bearish, then you know that there's every likelihood that the market can reverse at any point in time, and you have to make accommodation for that. Okay, so that's very important. So let's see what we have. So here you can see we have our entry mapped out. Just a sec. So we'll have our entry mapped out, and then here on the 4R, let's see what we have going on there. Just a sec. So on the 4R, you can see price has already returned here, and the 4R price already around this demand supply zone. Okay, so there's every possibility for price to completely reverse, or price may still push higher. So you just need to accommodate for all of that in your analysis. So for this one now, let's see if we're going to get something. All right, so that was a quick one. So you can see price came close to our entry but did not tag us in, which is unfortunate, and then price left. Okay, so by 5:15 we're done trading for the day. So we'll just take this out, and then we'll just look forward to Thursday. Let's see what we get. So Thursday, 6:15, 45, 7 a.m. So clearly you can see here the market now is officially bearish. Not officially bearish yet, but you can see the order flow is building up. Yeah, that's the word to use. So the bearish order flow is building up. Okay, so we would simply just be looking for the opportunity for us to kind of sell. Now let's see what we get. Any reasonable structure? None whatsoever yet, as far as I'm concerned. So let's see what we get. So this is New York session. Price is still dropping. Let's see. Price is still doing its thing. It's still dropping. We really don't have anything going on yet. By the way, we can look at this area here and we can see this is maybe a sweep of liquidity, something like that. Okay, so we can draw this guy out, the same price. If price returns right there, we can consider sales from there. But let's see what happens. Thursday is done. Now we're going to Friday. Let's see what happens on Friday. Okay, Friday 7 a.m. So you can see where price is at. So here we can say break. You can draw this one too, another one. So that essentially gives us this guy as an inducement. And then we can draw this one here as area where price may react to. Okay, while this is something, but there's also something to bear in mind, that there's also the potential for news to also disrupt price. So if you don't cater for that, you can also get hurt, right? So it's possible for us to have news come out that may disrupt price. So we have to bear all of that in mind. So NFP, FOMC, all of those are volatile news, CPI that can come out and completely disrupt price. So let's see what we get. Okay, so this one has ended up as a loss. You can see that. So that's simply because our stop loss, while we gave space, but you can see eventually that wasn't enough for price to still keep us in the market. However, if we're in the live trading market after this kind of sweep, we could have also re-entered that sell. So this is essentially it. Now, what model is this? You can see here, breaker structure, inducement, breaker structure. That is simply model B. Okay, so that is essentially it. So you can do this for any pair. Just pick the pairs and just continue to draw the structure, map out the lines to see if you can actually spot all of these trade opportunities on different pairs. And then just screenshot and share in the chat so that for comments and also for the students to engage with you. All right, so I want to believe this has been helpful to you. Like I said, pick any pair of your choosing, backtest this. That is essentially what backtesting is all about. And then forward testing in live market, you can forward test. Okay, so do this for the pairs, and that'll be it. So I wish you all the best. Just also to mention that there's also a software called FX Replay. At the time of recording this video, it's a tool that also helps you to kind of backtest your strategy. You can see stats on it, so you can check them out. I'm not being paid for for this, but you can also check them out. Very nice tool they have there. So that is it for that. Now, on getting funded, there are just two prop firms I recommend. One is FTMO and the other one is Funded Next. Okay, and that's simply because I use them. So at the time of recording this video, please take note of that. They're reliable, so you can actually use them, but that's at the time of recording this video. So those are prop firms you can use. There's so many other ones there, but I don't have experience so much with those ones to actually advise you to use them. But that's it. But also Funded Next, they do have exceptional opportunity where you get 15%, I think, of your challenge phase, in addition to your profit after you become a funded trader. So that's an add-on that you can really benefit from. FTMO, on the other hand, is really an OG. That means they've been around for a long time. They just acquired Owanda, a broker, so they're really gonna be here for a long time, I believe, and they're doing the business well. So you can also look at them and also really just benefit from what they offer. So I think with this, we've come to the end of the Stocking Profit Mastery course. Okay, we'll look at the strategy, and I can tell you, if you follow through with this diligently, you become unstoppable. So now what is next? Well, get into the market, implement all you need to implement, backtest the strategies, implement them in the live market, get a prop firm, personal account, and just trade and trade and trade. And then the last course in the series is the psychology course. Now, this is where I'll be able to help you. You know the strategy, but you still discover you're struggling, then I encourage you to take the psychology course, because it's going to help you, to kind of understand what the limiting factors are, and also help you overcome those challenges that help you become a pro and mastery. So with this, we can essentially bring this to a close and a wrap, on this course. I wish you the best. Stay stuck in profit, and see you in the next course. All the best, and bye-bye. Cheers.